Welcome back to another episode of the XRP podcast. Today is going to be good because I've got Abs back in the house, coming in from Good Evening Crypto. I want to do an intro for you guys. Good evening, crypto.
I think that might be trademarked and blueprinted at the beginning of my show from now on.
There you go. I
Thank
love
you
it.
for that.
I want to thank our sponsor today, and that is Uphold. We've all been there. Expenses pop up right when the market's starting to heat up. It's not the right time to sell. The last thing you want to do is sell your Bitcoin, your Ethereum, your XRP, or even your stablecoin, USDC. This is exactly why Uphold launched the EXA credit card. When I found out about this, I was blown away. It's an instant line of credit that lets you borrow against your crypto without having to sell. All you have to do is just use your assets as collateral and spend it worldwide using a virtual Visa card. This is the coolest feature I love about this. There are no credit checks, and you can repay on a schedule that works specifically for you. It's the smartest way to stay long in the market while accessing your portfolio's value today. Download the Uphold app and get your virtual EXA card in just a few taps.
So, Abs, we got a lot to talk about today. We're going to talk. Well, you know what? I want to lead off. We were kind of going in the pre-show about clarity. We'll talk about clarity. We are going to get into what's going on with the Bank of Japan. We'll talk about Ripple and RLUSD making their debut in Europe under Mika. And listen, there was a big unlock this week. So we got to talk about the elephant in the room on that, what that's going to look like for XRP in general. XRP is up right now, along with Bitcoin. So maybe there's something brewing here. Are the whales coming back in? Let's jump into it. So first, I want to hit on the issue of clarity. So you and I kind of chatted a little bit on the early side. Where do you stand right now? I mean, are you feeling that this could get through? What's your positioning? If so, where are you doubtful? Give me your case.
So I got to give a little context here. Starting in the fall of 2025, I made the Clarity Act kind of a centerpiece on my program of Good Evening Crypto. And one of the reasons that I did that was because we had been comparing this piece of legislation to the Telecom Act that was passed in, I believe, 1996. And what that did was it unlocked speculation for internet companies. And across the board, we saw a 50x in internet stock value over the next 3 years. So that drew my attention. I said, if we can get something similar here with the Clarity Act, it is worthy of committing my attention to this bill. Now, people who have been following this for the better half of a year will remember that in the fall of 2025, we were promised this is going to get done by Christmas. And then it was February, March, April, and here we are in July of 2026 having these same discussions. Now, it's important for July in particular because as you're showing with the poly market odds, it dropped as low as 39%, the lowest recording in the calendar year of 2026. But July is a month where we are going to get definitive answers here in the crypto space. July 22nd through July 26th, the Senate could potentially be voting on this bill. And you probably know better than I do, Paul, the calendar and the timetable here, it's really working against the industry. And Trump also stated he's not going to sign any piece of legislation until we get the housing bill done. And then we also have the SAVE Act, which is going to prevent fraudulent voting here inside the United States. So two other major pieces of legislation. There's also a defense spending bill that's going to be addressed at the end of July. That's going to come before the Clarity Act as well. So there's a lot working against the industry. And I defer to some of these executives. And there's an industry executive, Mike Novogratz, who had a phenomenal interview over the weekend where he stated that speaking with Democrats, even moderate Democrats, there is support for this bill. But me and you had a phenomenal kind of breakdown before the show, and I think we should dive into it right here, where the banks are pushing harder than ever. They're working every angle to not get this across the finish line. First, it was stablecoin yield. Now we have the ethics issue. And I actually titled my episode for today talking about the ethics issue with Trump. Trump handed the Democrats a green light to basically use the ethics issue as a way to not pass this bill. $1.4 billion in personal income for President Trump in the calendar year of 2025. Well, regular retail investors like myself, we've been sitting in a bear market wondering,
got torched.
When's the profit going to start rolling in? That's what we've been asking. So long story short, and I do apologize for the kind of long-windedness, but I think July is a month where we're going to get answers. If you listen to industry executives, they say 10%, 20% chance here. I am going to stick with the optimism. I'll lean into the lower odds, and I'm going to say I am optimistic it gets across the finish line, although I'm going out on a limb.
Yeah, I have been like a rubber band, man. I've been up, down, in and out on this one over the last year, thinking, yeah, it's going to go through. And then, I see the upper hand kind of get in it. But we have been deep dive researching these banks and their tactics for a good part of a year and a half now. Okay. And one thing that surprised me, and still to this day, I have not ever in my life seen a lobby group that is as cunning and powerful and deep pocketed as this one right here. And that's the ABA. When you look at what this banking organization has the capacity to do with $500 billion coffers, by the way, to be able to combat against all the crypto companies out there, whether you look at what Coinbase is doing. I know you mentioned Ripple jumping into this in terms of the companies that are ranked on spending the most to support this. I just feel like these banks have, I think they have some more ammunition they're going to drop on us this month. In July, here's my prediction: expect even more bombshells coming out of the banking industry that will be negative for clarity, because this is, of course, their biggest issue. And like you just mentioned with Trump, I mean, that disclosure report last week, I mean, this was just, I mean, this is cannon fodder for Elizabeth Warren. This is exactly what she wants, you know, in terms of being able to fight this off. So I'm really concerned about this, because I know this is a big deal for Ripple. If clarity gets through, Ripple wins big. Probably one of the best winners of all. Sure, Coinbase is going to win. A lot of these institutional guys are going to win, but man, Ripple is going to, they're just going to go to town, you know, in terms of being able to implement so many strategies and products going forward. So big deal.
I totally agree with that. And I think for anybody out there who's wondering why Ripple and the XRP ledger are in a position to succeed post clarity, well, you can just look at what happened with Stellar and the DTC over the last month or so, where they came out and they announced this tokenization project. But that's not what caught my attention. What caught my attention was an interview that their CEO gave a couple of days later, where they talked about how they've been working behind the scenes with the DTCC since 2018. And we know, covering the Ripple lawsuit, they've got over 1,700 NDAs, 300 public companies that they're working with. They've got massive integrations connecting them to Swift, BlackRock, JP Morgan, all these conglomerates. And so I think behind the scenes, Ripple has really perfected the technologies that they're ready to roll out. And the Clarity Act is that green light to integrate these projects. So that's why it's such a big deal.
Yeah, and we had Danelle on the show. She was going into some of that. Matter of fact, we kind of touched on the whole issue of the DTCC. And remember, that particular partnership doesn't go live until the 27th. I was kind of curious, why not now, you know, for them to be able to deploy. But now I'm starting to see some of the other puzzle pieces coming together in the industry. And one of them dropped this week, and that was this new open standard stablecoin. So you've got a situation right now, and it is brewing, and it's brewing in a big way. So much so that Forbes drops this on their digital assets section of their website. Why an open standard will win, not compete, win the stablecoin race. And if you guys haven't been following this, the summary, I'll kind of zoom in on that for you really quickly. There's 140 companies, including Visa, MasterCard. By the way, Ripple's also involved in this, that are collectively coming together for a governed stablecoin that's going to be an open standard addressing this fragmentation problem that, if we have one, that essentially is going to go hard against the reigning champions. And that would be, of course, Circle, Ripple, and Tether. So I don't know. When you saw this, what was your first response? What did you think?
I thought, no surprise, Ripple and Stellar are once again involved. That was my original thought. And I know that's an optimistic take, but here's the reality of the situation from my perspective is that the Clarity Act, the Genius Act, what are they working to do? They're working to prevent people like myself and probably the thousands of listeners that you have from being able to earn this passive yield by just holding that idle stablecoin. Well, what I thought was interesting is they've got no problem giving it to the institutional investors. And that was my main takeaway from this entire narrative. And there's a great Peter Thiel quote that came to mind because you talked about competition. Peter Thiel says, competition is for losers. Monopolies is where the winners lie. And I think what's being developed here, or at least what they're trying to do, is develop some form of a stablecoin monopoly with many of the same powerhouses that dominate traditional finance, while also incorporating some of these crypto products to give them more control over the yield. So I think we're going to see a lot of this. Now, I saw a great update from Scott Melker where he was talking about this makes his Clarity Act odds fall to less than 5% because if the Clarity Act gets passed, something like this would be put under pressure. There is a reality there. But again, I separate these issues. And to me, it seems like it's more of an issue of, once again, preventing retail investors from getting what they deserve, but having no problem handing it over to the institutions. That was my main takeaway.
Yeah, well, I mean, listen, I think Ripple's at the table because they don't want to be left out of this particular strategy that's being implemented. And the argument I think Jeremy Allaire, the CEO of Circle, made is that, listen, it takes a lot to execute. And can you? Because we've seen this before. I mean, look at PayPal. They launched with big fervor, and PYUSD still not a top stable coin, definitely not being used in the infrastructure. One difference here that kind of caught my attention is the fact that the distribution layer of Visa, MasterCard, Stripe, Coinbase, BlackRock is going to be undeniable. And when you put distribution at the front, especially with the fact that you've got, all of these massive companies that are tied into this, I don't know. I think there's a big opportunity here for a very short time, maybe for this open standard to become somewhat of a standard in the banking industry. And if that starts to roll out crypto in banking, who's going to be running unless you're doing DeFi? Maybe you're going to be doing some DeFi. I know MetaMask just launched a massive program to kind of combat this, but it's troublesome. I'm a little bit more concerned about this, more so than not.
Here's another takeaway, and I would love to get your opinion on this, Paul, is that Circle wasn't among these companies. And I found that to be extremely interesting because I was approaching it from the angle that this may actually open up another door for Ripple to go out and acquire the company Ripple. Now, I know it's not Conspiracy Friday.
Circle.
Or sorry, Circle, yes.
Yeah.
The reason that I'm even addressing this is because, again, what happened over the last week or so is that MiCA regulations rolled out on July 1st, and Ripple was one of those approved companies inside of Europe. And now I'm starting to wonder if Ripple is really cornering the stablecoin market. And we saw the Circle stock responded by going down 17% on this news just yesterday. So I'm wondering if there's a devaluation occurring with Circle, increase in valuation occurring with Ripple and RLUSD. Is there coming back to that Peter Thiel quote, is there a quote unquote monopoly forming before our very eyes in the stablecoin industry? What are some of your thoughts on that? Do you have any opinion?
Circle would have to maintain a good defense posture right now, unless there was a takeover bid that could come in. And I think right now a defense posture, they're going to have to deploy a lot of capital to get there, unless the market turns around quickly. If the market turns around quickly and we see some movement in the crypto space, then that's a different story. But Jeremy Allaire, I think, is going to defend hard on this. But you're right to think that they could become a target. And whether that's a Ripple or a JP Morgan or someone like that could be looking at this valuation and just simply saying, hey, we could go in and just do a hostile takeover and jump in the game and own another major distribution vein of stablecoins. If you apply that with what is happening with OUSD, even though we haven't seen anything big happening with OUSD, this is still, in the ether.
Mm-hmm.
But if they get their way, it could definitely change the future of stablecoins.
Another thing,
remember this: Genius passed. You already have these issues boiled down to, in Genius, that issuers cannot pay yield. So if Clarity comes in and supersedes that, that's a major hit to the banks. It's a major hit to stablecoin issuers, all of those kind of situations. But you've got Genius also playing into this in a very big way, because it is going to start to dictate the new model going forward. So too many things, a lot of irons in the fire.
And another thing I found really interesting was, again, if you listen to how they're talking about the Clarity Act, you would think these companies were staying away from cryptocurrencies. They're staying away from blockchain products. But then you look at what they're actually developing behind the scenes and the partnerships and conglomerates that they're joining. And JP Morgan's going all in on crypto. Fidelity is now putting out XRP price projections. Bank of America has already perfected this stuff. They're going to be integrating these technologies over the next year or so. So all of these companies are moving into the blockchain space. The question that I continue to ask myself is, would these major companies be moving into crypto if it was going to be an unregulated environment? Now, when I listen to other industry experts, they say, don't worry, the SEC, the CFTC, the OCC, they've provided guidance. But essentially, that only provides a very limited amount of protection. If we get a reversal during this election cycle, and let's say Senator Elizabeth Warren is now head of the Senate Banking Committee, Maxine Waters is now another prominent position. These people are going to be actively pushing against crypto, very similar to what we saw with Gary Gensler. And I know it feels great. It feels like crypto's here to stay and we have all this certainty. If Democrats get control and anti-crypto politicians are in positions of power, that same anti-crypto army that we thought was dead and gone, we're going to see those ships on the horizon. And before you know it, they're going to be on the coast invading just like 2020.
Yeah, well, it puts the United States in a very unusual situation because it does potentially thwart innovation across a lot of different areas of the industry, including, and Ripple's going to be leading the pack on innovation, believe me, if we get this through. But the reality is this: if the banks feel like they have a foothold in tokenized stocks, tokenized securities, if they have a foothold in an OUSD, open standard stablecoin, that they can start to implement and utilize the blockchain without the stipulation and regulation that allows for innovation to invade into the country via clarity, then they may have a little bit of a window here to accelerate. And in essence, it won't be regulatory moat. I guess it kind of would be lack of regulatory moat that might end up being a play, which could be good for the banks, but it would be bad for American innovation, I think, in general. I talked to a couple guys this week, one over the CEO of Zama, and they essentially have basically it's a tool to create privacy and confidentiality on and within ecosystem, stablecoin, multi-ecosystem platform. And he was in the point that this was huge because the US is the only country that can lead the way on all of this to truly unlock what blockchain is really built for. So there is a lot at stake right now, a lot at stake.
And if digital finance is coming and we need this regulation, it's inevitable that other jurisdictions are just going to take advantage of the opportunity. If we leave this regulatory gap, we're going to see Japan, South Korea, the UAE, Europe absorb all of the market share that should be coming back into the United States. And during the election cycle, when Trump was running against Kamala in 2024, one of the very simple explanations that I used to use for newer crypto investors was, if this space is going from $2 trillion to $5 trillion to $10 trillion, why not give Americans exposure to these technologies so that wealth can come back into our economy? It's going to grow. 100%. The writing is on the wall. So I think there is a pressing issue. And I think if guys like me understand this, industry executives in the banking sector, they understand it better than I do.
Well, in the retail, that's the problem, is getting people to truly understand what this means for liberating finance for the average American, because it's a huge deal. Because it's going to open up so much opportunity here if this truly does get underway. But it's a big issue that we're going to continue to face right now. Hey, let's talk a little bit about Ripple. They unlocked 1 billion XRP from their monthly escrow. This is roughly about, what is that, $1 billion, well, current price at about a little over $1 billion. Everybody's watching this right now. When you look at that and you kind of consider the timing, because overall, this isn't great timing for Ripple to say, hey, let's go out and sell some XRP. How would you play this out? What would be one of the scenarios that you would possibly use in addressing this unlock?
So this is just the standard playbook for Ripple. We've seen this for years. And what I think is happening here is a redistribution of the XRP token, getting into the hands of people who will actually use this technology. A simple way to understand this would be, look at what Ripple's done with their acquisitions. Same idea can be applied to the XRP currency. Yep. They're going out and they're acquiring companies that need to use this technology in order to beat their competitors in the same industry. I think a similar example is happening here with the XRP token, where they're distributing this into the hands of people who will actually use this technology. But the $1 billion unlock is nothing new. We've seen this since 2017. And for all of our newer investors who don't understand what's happening here, Ripple typically unlocks 1 billion, not typically, they do unlock 1 billion XRP tokens at the beginning of every month. typically they offload about 180 million to maybe upwards of 300 million on a high volume month. And then 70 to 80% of that is put back into the escrow when we go through this redistribution process. So it's not as if Ripple sees the writing on the wall for anybody who's newer to the industry and saying, I'm dumping the XRP token off our balance sheet. This is standard business practice for the company Ripple. And there's a narrative that I think is becoming more important every single day. That is the narrative of Ripple becoming a federal bank. Now, a lot of attention has been given to the Clarity Act. There is another piece of legislation called the PACE Act, which will allow for companies like Ripple to have direct access into the Federal Reserve. Now, why do I reference that in this article? Because if Ripple becomes a bank, there's an interview with you, Paul, where you're talking to Sal Gilberti, and he says there is every incentive in the world for Ripple to lock up that remaining escrow and use it as collateral to become the first digital bank here inside the US. That is what I think the end game is. So I know it's a tangent from the billion being dumped, but this is standard business practice, and I think there's something bigger happening in the background.
Yeah, well, that is to the point you're getting at, is the Sal Gilberti interview. We were going on a deep dive around that, and he was definitely in the camp that this could be one of the key strategies that Garlinghouse is undertaking. And to your point, I mean, this has been the standard play for Ripple. Usually it's an 80% relock, meaning they just take 80% of that and push it right back in, lock it up again. They drop in a little bit of circulating capital to handle, operations and also feed the system, which is either acquisitions or potentially going into companies and all sorts of opportunities, which could even be grant-based, I think. But I mean, you still have I think the bullish lockup is the 90%. That would be a big one right now if they would just go with 90% of it. We'll see though. Because remember, it signals Ripple is flush now with capital. So you look at their active ETF inflows, corporate revenues, and they don't need to dilute the market. So in a month where kind of seasonal trends historically favor XRP. So the supply constraint could be the catalyst, I think, need to break its year-long descending channel that we've been looking at. And we did get a little bit of a break this morning. So if you look at the charts.
I think people are getting overly caught up in the price action of the short term as well. There's a common saying, sell in May, go away, always remember, return in September. And I think we're seeing a similar playbook here where nobody thought the bear market was going to come. There were a couple of outliers there, but the momentum behind this industry in the fall of 2025, the writing was not on the wall until October 10th. After that massive liquidation event, that's when some bears began to emerge. But here's what I would say to newer crypto investors or people who are maybe just beginning to deep dive on these topics is that this market can change in a single headline. This market can change in a single week. We see bear markets turn to bull runs. We see bull markets turn to bear markets based on a headline. And so why do I emphasize that point in the summer of 2026? Because I think there's so many things that are yet to unfold. I am a believer, Paul, like we talked about at the beginning of the show, if the Clarity Act does get across the finish line, and I understand it's a major if right now, that will be the catalyst that we look back on 18 months after the signing and say, wow, that was it. Exactly. And so I continue to hammer that point home because I tell my listeners all the time, focus on the catalyst, not the short-term price action.
Yeah. Well, and it makes you wonder, like to your point, at any point you could see a turnaround in a market. This is a good example right here. XRP whales are returning. Retail staying on the sideline right now. Crypto quants showed a little bit of data on centralized exchanges versus the retail spread right now. Big difference here. Binance was up even. All of this is pointing to maybe stronger large holder activity. And the last time I saw these kinds of activity points was when we started to see XRP running over $2. So very interesting timing at the time in which the market has been really suppressed a little bit. And really Bitcoin, I think if you look at it, let me see if I can go to the chart real quick for you guys. I'll share this tab instead. And we're looking at the XRP chart right there on a big green day as we record here with abs. And Bitcoin, same in the position, 2 green days working right now. Trading right now back up at 61.7 after a 59, almost cracked 59K. I think maybe a wick did. But then you look at XRP, which was a hold position that a lot of people were saying this is the defense, the line in the sand, which I would agree, that $1 mark. What's the mental state of the XRP army right now? How do you feel?
I feel very fortunate that in our community, we're very focused on the long-term vision. I think short-term traders are very frustrated, but
Yeah.
we've been fortunate enough to I've been doing my show live every single day since 2022. So a lot of the people who've been listening to our program understand that we're not in this, even for a $3 XRP, we're in this for a utility-driven
Yeah.
market. And
Yeah.
that's not something that's going to occur in the next 6 or 8 months. It's more that long-term oriented investor, very similar. Probably many of the people who listen to my program found yours first. And so what I think is so interesting about what we're seeing in the XRP community is that over the weekend, the bears were extremely confident. I've got charting friends and TA guys who are texting me. They're saying, Abs, get ready for a 60-cent XRP, 92-cent XRP at a minimum. I didn't believe it, but here's what I did do. I've been consistently moving my dollar cost average up as the price continues to go down. Let me just throw a simple example out there for newer investors. Less than 12 months ago, XRP was over $3.50. Now we're here 11 months later and we're almost at $1 exactly. It's the same token. If anything, we've seen substantial progress for the network because of the acquisitions, because of the RLUSD stablecoin, and the ETFs weren't even live when that happened last summer. So if you're just looking at the technology and you're not looking at the price action, the XRP ledger has actually grown so much during this bearish time. And I think all this pent up demand is just waiting to explode here whenever the market turns friendly again.
What do you make of the situation with the S&P? It looked as though it was starting to trend down. We had a little bit of a pop over the last 10 days. Then we hit this low right here. And I'm showing the S&P 500, guys. This is currently at 75.16. And here we go. 1, 2, 3, 4, 5 days, green candles. So, and almost back up to all-time high. So my question is, do you think that we are still in that AI zone where most of this capital is transitioning to, and that it's going to take a little bit more time through the month or through the summer before we see a rotation of capital into crypto again?
I
What's your thesis?
completely agree with that. And again, I hate to harp on the Clarity Act so often, but this is one of the reasons I think it's going to be such a big catalyst is because there is going to be a catch-up trade that happens in the crypto industry. And this is my belief that people are going to be writing about for years to come. Because if you look at how these other capital markets have performed, gold and silver new all-time high last year. Oil has been exploding. S&P is up. We've got Kevin Warsh coming in. And I know people, it doesn't look like he's going to lower rates. I'm not the guy to go to on this particular topic, but I do think that's going to have a major impact. Here's what I do think will happen with the AI trade. I think that we're in overvalued territory, but I'm not sure we've topped yet. I have most of my exposure to crypto, but what I think will happen, according to industry experts, is there is going to be a rotation of capital from the overvalued AI trades that people have made tons of profit on, and they're going to invest into these digital assets at lower prices, probably towards the back end of August. Now, again, that's a big stipulation here because a lot of that is going to depend on the Clarity Act. So it's hard to it's hard to predict these things without knowing the definitive catalyst that will play out. If Clarity gets signed, we get a fork in the road there. That's going to change the industry. If Clarity doesn't, this is the direction that I think we're headed.
Yeah, you've got, I'm just showing some stocks here out there just to show you that, if there is rotation of capital, could we be on the verge of that? This is NVIDIA right now. You can kind of see it's about 16% down from its high right there. You look at SpaceX, that of course is the one that everybody's talking about right now, also retracing back down to 158. Still pretty good, actually. I was kind of surprised that it held that. You got Coinbase starting to recover in the last few days. Of course, Robinhood starts dropping bombs. They're launching their chain, and that also goes back ripping into 116 territory. So there's some interesting things out there playing in the tech space, which gets back to the S&P. It's why we're starting to see this number right here, where we're seeing this little bit of climb out right now back to 7,500. So I don't know. I'm still on the fence as to whether or not this bubble is over. If this gets an elongation through summer and we see some catalyst that comes in from even Clarity, then the real question will be, will people have enough cojones to rotate capital when a SPY an S&P is setting at 8,000? That's the question. Will they go, let's ride it out, or no, this is the top, it's time for rotation into another asset? Big
Totally
questions.
agree.
Yeah. All right. So other things we got to talk about is the Bank of Japan. couple of points I want to show here. And this was a big issue, I think, that will address a few things. And there's a lot of people out there talking about this. Bank of Japan may have just intervened in their currency market. So you've got JPY, the yen, hitting a 40-year high. You also have nearly 1.1% drop in hours, which is not normal market movement right now. So Japan spent around 73 billion in April and May doing exactly this, selling dollars and buying the yen aggressively. So with that being the case, because there's no official confirmation yet, but the size and speed, it kind of points to that issue of defense. What's your opinion on the Japanese yen right now? Because the carry trade is often looked at as one of the big factors. I know our friends Jake Claver and the guys over there, they talk about this all the time.
Yep.
What's your opinion on this?
So I want to give a little context as to why this is important for anybody who doesn't understand. August of 2024, the reverse carry trade began to play out. Japan intervened. We saw Bitcoin and digital assets across the board correct over 30% on that news. Now, can you guys imagine a situation where we're in the middle of this bear market and XRP is trading at $1 and Bitcoin's at 61K and we get another 30% move to the downside? So that's why you're hearing so many people talk about this topic. For any of our newer investors who just don't understand why we'd be talking about Japan, if this reverse carry trade were to play out, you would see a massive correction across all capital markets. It wouldn't just be crypto. It would be the S&P. It would be housing. And of course, it would be digital assets alike. Now, here's my opinion. We're on the brink of intervention. I actually was listening to Jake talk last night where he was talking about this. And he was saying, we're beginning to see the signs that Japan really doesn't have a choice at this point.
Yeah.
We're seeing these numbers, the 162 number that you just showed it on screen. Mm-hmm. Everybody had been talking about if we break 161 to 162, Japan has no choice but to intervene. Here we are. So I'm excited about, sorry about that. Go ahead.
No, I'm just going to add to that because the action would be that they're dumping massive amounts of dollar reserves onto the open market. That's the point you're getting at right there. It's huge.
Yes. And this is a big concern, right? Now, the writing on the wall for the XRP community is, of course, the theory that Jake has. The reverse carry trade outlines, the XRP ledger is tapped as a liquidity corridor. The OCC provided guidance so that stablecoins can be leveraged in this once-in-a-lifetime event. We've all heard the story, and you should hear it from Jake, not myself. But I'm going to be very focused on the correction that comes beforehand. Because if we get a 30% correction in the current state of the market, Paul, we're going to see every single retail investor run for the door. I really believe that. So
it will be total capitulation. Carnage in the streets. Yeah. Dogs and cats living together.
Black Swan event. And you know what's interesting too is that a lot of these bears aren't even pricing in the reverse carry trade. Like there's been, because I watch so many TA guys. I love that like a sporting event, right? Like some people watch Celtics. I watch all the different TA guys and I pick my favorites. But there's some people out there who are calling for a $48,000 Bitcoin. I'll be very transparent. I don't think we get there. That's not what I'm betting on. But if we were to hit those ranges, you would need a catastrophic event like the reverse carry trade to get us there. That is my speculation.
Yeah, core issue right here. A central bank, if you think about this, can spend billions to basically shock these short-term speculators and force them to cover their positions. So intervention, I don't think it fixes the structural, differences, but until we see the gap close between where U.S. interest rates are and the Japanese interest rates are fundamentally narrowing, just the natural gravity of the market is going to keep pulling the yen up, which is interesting. Japan essentially spends billions of its assets and its reserves right now just to buy a few weeks of breathing room.
Right.
I don't know.
And you have to think I think this has been playing out for 30 years, 29 years, 30 years at this point.
And they always come to the brink every time. It's just right there. It's on the brink.
That's the playbook. So you got to think Japan, and this goes back to Jake's theory having a credibility in my perspective. Japan obviously has been shaping a plan for this. I mean, anybody who knows anything about Japanese culture, first of all, they're planners, right?
Yeah, big time.
Second of all, I mean, this is something that wasn't unforeseen. We've gotten very close on several different occasions and they've had to intervene. I guarantee essentially, and I have no insight on this, that they've had these discussions and they've developed these plans. They can't just be planning for the catastrophe that we all know is coming.
Well, and it could get to the forced unwind. If we get the yen violently crashing, let's say from the 162 range where it is now, let's say down to 160, you're talking about just algorithmic trading programs And a lot of these leveraged funds are just going to be forced to panic sell, just which is going to be unbelievable, which is buying back the yen to cover their losses. This is the carry trade unwind that everybody's concerned about. That's the point. We are right there on that window, and you're definitely there. But then you look at people just saying, "Hey, it's the long-term effect. It's business as usual. Don't worry, we're going to be okay." Federal Reserve benchmark is still sitting good. Bank of Japan gradually ticking its rate up. Still very concerned right now.
And if you look at what's happening all across Southeast Asia as well, I mean, the integration of blockchain tech is happening far quicker than it is here inside the United States.
Yeah, for sure.
And some part of me feels as if these two narratives in some way, they have to be correlated, because the new financial system is the blockchain system. And the areas that are under the most pressure, which we've just outlined, they're the ones integrating this technology as quickly as possible. So another safe assumption there that those two narratives are connected. But again, it goes back to the idea, Japan's not a nation that didn't see this coming. I bet they've been planning for this for probably 15 years.
Well, how could they? Some of it they could plan, but on traditional financial rails. Okay, that's one reason. But I feel like the whole financial industry has been flipped upside down in the last 5 years, and they weren't ready for what we're dealing with right now. So I don't know. I think even though that's long-term planning, I think they had to reset their books onto the situation with what's happening in the blockchain. And I think Japan is one of the more aggressive countries that are very pro blockchain and crypto overall.
Undeniably. And pro XRP Ledger and Ripple. I was reading an article the other day. I believe it's over 60 of Japan's largest banks have already integrated Ripple's technology.
Yes, exactly. Yeah.
So it doesn't go to say the XRP Ledger, but that's a safe assumption.
Yeah, and I just wonder, with the opportunity here that this represents, if you think about the Bank of Japan, kind of correlating directly to Stablecoin now, which is already hitting the market right now. It's JPYSC. So you've got a whole new scenario that could play out on what could be now an on-chain carry trade risk, which would be, I don't know. There's some weird things happening here. Think about Ripple, all right, and JPYSC, which is the new yen stablecoin, launching simultaneously in Japan. We already know that's going on. Now the infrastructure exits to do a carry trade entirely on the blockchain. Because if capital flows instantly, if you think about digital yen to digital dollar, it's backed by treasuries. Essentially, it creates pretty much a frictionless way for money to leave Japan. So,
yeah.
I'm telling you, Japan has so much to do with the global economy. It is insane how they are connected.
It's undeniable. And you know what else is interesting, Paul, is that, again, it goes back to this being somewhat planned, right? From the standpoint of Japan needs a solution. That is kind of like the crux of the issue here, is that Japan is approaching a once in a 35-year change in history, a change in economic structure. And so I think that's what's necessary is a new financial product. And that's kind of what blockchain provides.
Well, I think it's a little bit in this particular situation with this new connection with the stablecoin there. I think it's still a fear of capital flight, because if you think about retail investors, companies over there, they could seamlessly swap billions of yen into RLUSD, like boom,
right?
On their smartphone. So, and that's trying to chase higher U.S. yields, which essentially that would trigger a decentralized dump of the yen, and again, that would be the scenario. I wonder if Jake has thought about, I'm sure he's thought about that kind of issue. Because remember, all of this is only, and it's interesting because it's only happened in the last 2 years, but it was like gradually and then all at once, Japan just did this, in terms of the stablecoin use case. It'd be like the US government launching a stablecoin that's tied to US treasuries and having a company like Ripple that would basically be able to take all of that exported securities that are mostly bought by the world and essentially be able to dump those onto the open market and transition into blockchain literally at the speed of light, which is still what I think Scott Bessent might be up to with this stablecoin move that we're trying to do.
And I think
especially with OUSD.
Right. And I think Scott Bessent has been very outspoken about his vision for stablecoins is to boost the US Treasuries market. Everybody should have exposure to United States Treasuries. When you listen to how Scott talks about these things and the way that they're going to do that, the way they're going to touch every part of the world is through this stablecoin narrative. Yeah. And so ultimately, because a lot of people will ask me, why does the US government even advocate for stablecoins? I don't understand it. And I said, well, it benefits the treasury market. Every single stablecoin creates more demand for United States treasuries, which ultimately comes back to the United States and benefits us. And so these narratives they're not even separate. They're one and the same, if that makes sense.
Yeah, and I know the comments will probably say, well, they can't do that because there's all these strict limits placed on RLUSD, the launch in Japan, which kind of shows that regulators are fairly or very acutely aware of what could happen. So they're kind of bottlenecking, digital dollars, if you think about it, just to ensure that stablecoins don't, become an unregulated turbocharger for this carry trade,
right?
Which is the scenario. So very interesting times we are in, Abs. Very interesting times, for sure. What is your opinion right now? If you were looking at the current market as it is, and you got brand new listeners that are coming over from TradFi right now, because they listen, let's face it, you guys in TradFi out there, you've made bank this year, right? If you've been any of these AI trades, if you were in on Micron, if you're setting in on Tesla, SpaceX at the early, any of those, you're out there trading well above where you started the year in. Would this be a good rotation time? Is this the time to pull the chips back and say, let's go into a depressed market and asset? Because remember, that's where millionaires are made, billionaires are made.
And
what would you say?
Well, here's what's obvious to me. The radical devaluation of digital assets has not been correlated to negative things happening in the market. When you look at what happened to Bitcoin, to XRP, to Ethereum, to Solana, there wasn't a FTX collapse. There wasn't an attack on the industry. There wasn't a hack. There's just been a rapid depreciation in these technologies. And I'll throw out some speculation out there. I think a lot of it has to do with Wall Street being involved in some of these trades. Like there was a State Street article that came out in early 2026 where they're putting out FUD, they're shorting the market, then they're buying these shares back. I think there may even be more of that happening than organic retail trading in the crypto space today. So I don't want to scare people with that. But Paul, do you have a quick comment on that one? Because I saw you might want to jump in.
Yeah, you're exactly right. They're playing both sides. And I think Wall Street has started to figure out how quickly and how efficiently the blockchain works. And it's 24/7. So they get to run the market on the weekends, which is typically the issue that forces them into losing spreads because they can't get to open market and liquidity on the weekends. Now they can, even though that's probably going to change very soon. Which is going to be interesting in itself, because now you are going to truly see because right now I feel like it's only the TradFi guys that really understand. But if you get into a scenario where it is no longer just the guys who understand, but every RIA, every hedge fund operator, every organization out there that can access 24/7 liquidity,
game over.
They're going to be. We're going to need some AI agents just to keep up with those trade issues that we're going to be dealing with, unless you're doing one thing, and that is holding long. That's the only way you beat that market, is hold long, because time heals everything, man.
Very true. Time in the market, not timing the market, right? Yeah. That's what they say. But to go back to your original question, the case that would make to advocate for digital assets is this. This market has grown so much. The Genius Act, the ETFs, the integrations, there's been so many acquisitions. There's been so many mainstream traditional companies that are now advocating for this technology. And you'd assume, if you just read the headlines on the crypto space, that prices would have increased between last summer and now. But the Wall Street case, or the pitch that I would make to these Wall Street investors, is no, you've actually seen a 65 to 70% regression based on, even though we've seen all of this growth and development. So Logically, this is an undervalued market. 12 months ago, in a worse environment, we were up over 70% from where we are today. And that is the pitch that I make to the earlier investors who are like, well, I can put my money in Amazon, I can make my safe 25%. Yes, but if you invest at the bottom of a crypto market, there isn't volatility in any other capital market on the planet that will give you the type of returns that you can get here.
I think everybody's walking a fine line right now on a lot of the securities out there in terms of the stocks that are trading, because they've been up so long, this whole year. And at some point, you've got to take profit on these kinds of moves. These are the kind of markets many people would still say, all right, no, it's going to be a forever cycle, or we're in this new super cycle that is AI driven still. I mean, if you get more wonderlings like Micron that all of a sudden just appear onto the market and then, do what they've done, it only reinforces everybody chasing that FOMO, which means it still sucks up that liquidity into the TradFi markets. You don't see that because we haven't seen a run on digital assets like that just yet. The last one we saw was when Bitcoin went to 125. So
here's another interesting point, Paul, is that, and I'm sure you saw this clip of Tom Lee talking about how he believes that crypto is the back end of the AI trade. It's the monetization of this agentic economy, I think is what he called it. And I've heard a lot of people talk about this idea that because of AI agents, the scaling of the economy is going to happen so quickly that this AI quote unquote bubble that we're in is just going to continue to rise.
Yeah, exactly. Yeah. It'll just scale because of the growth and the speed in which AI is using its own infrastructure, essentially. The real question will be compute power. Obviously, energy will become a player on that, which I'm still invested in a handful. And you guys always ask, what do I invest in? I'm going to show you a handful of things that I'm in just because you guys are following this show right now, which, by the way, we cracked 500,000 subs.
Well deserved.
That is insane. I'm still going, how the hell did we do that? So anyway, thank you to all you guys out there. But like I said, one of the things that everybody's always asking, well, Paul, what kind of stocks or bond and crypto are you in? Most of my trades out there. One of the ones that I've been running though is Jupiter. Again, not trading advice, not investment advice. I'm just giving you guys kind of a little bit of inside peek of the kimono here. This is the run that we've had on Jupiter. This is, of course, is Solana related. It is one that I still think has got an opportunity going forward in a big way. So be on the lookout for that one. This one is a sleeper that I'm getting ready to go into, and that is Samsung. And I won't go into a thesis on this, but there is something happening between Samsung and Apple that I think is going to push Samsung ahead. Be ready for that. This one right here is Devon Energy. If we see any kind of energy push, this is my hedge on some craziness that's going into the market right now. So just be aware on that one as well. And of course, the other one I want to show you is CAT. Where is my CAT chart? Because I think I have it here. ATO, this is another one that I'm in right now, is ASTS, which is basically a Starlink competitor. Just to stretch this out a little bit, I'll show you where this thing, I've been in this one for a long time. This is the chart on this one. It has come up from the $11. I mean, so it's almost an 8X right now on that one. So Caterpillar, I like that one. These are all stocks, guys. So those are some that I continue to hold. Obviously, digital assets, XRP. I have some Solana, some ETH, all that kind of stuff. So these are the things that I'm considering exiting out some of these positions because they've been such good returns this year. And it's time maybe to just take that money, buy this dip right now, buy this dip, buy more XRP right now. Make sure and follow Abs out there. Good evening, crypto. And we will catch you next time right here on the XRP Pod. Take care.